Welcome, folks. Steve Roach, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. We have the Dow Industrials down 223 right now. Nasdaq's off 43. S&P's off 23. We have a great treat for you out here today, folks. You know, we talk about Harmony Gold. We talk about the Rand. Well, today, Harmony come out with some numbers. We got the CEO, Graham Briggs. Graham, congratulations on these numbers. I can tell you, you know, in the mining business, there's not many folks that have had a five-fold increase here. Talk to us.
Great stuff, Tom. It's good to hear you. Yeah, a good quarter.
Yeah, you know, it's amazing, you know. And, you know, first off, I want to thank you for all the support. But, you know, over the years, I remember just even in 2001, and I've been kind of explaining to folks on a continual basis that how dynamic it is, you know, when the Rand gets weaker and the dollar gets stronger, that gold can actually go lower. And in the position that you have is that basically is a decent position, right?
Absolutely, Tom. Yeah, during the last quarter, from quarter to quarter, the gold price really went up only 3% in dollar terms, but because of the Rand weakening slightly, 5% in Rand terms, and that also helped our profitability.
So can we walk, you know, there's a lot of new listeners out here, Graham. So, you know, I'm looking right now, and folks, if you're watching the TV portion of this, okay, what you're looking at is that we have the Sustainability Development Report up for 2012. Can you walk the folks through, you know, what the goals are of Harmony, you know, for 2012, 2013, Graham?
Yeah, sure, Tom. What we have is a fairly simple strategy, and we focus on three main issues. We're talking about growth, and really growth in its many forms, including profitability. We are talking about getting the best out of our current assets, and then we're talking about exploration. Our main exploration focuses are in Papua New Guinea. So in South Africa, we've done a lot of restructuring of our operations, really getting those operations and spending some capital on those operations that have got the potential of long lives. We've been closing the shorter operations, the guys that sort of got a weaker grade, and you know, the ore bodies are basically tired and worn out.
Yes.
And so that's what we've been focusing of late, and the money that we've been spending on these new capital projects is now starting to bear fruits, and we are starting to increase our production. So during the next few years, we've got a production profile which basically goes up from, you know, currently this year we're looking at 1.3 million ounces, and then goes up to 1.7 million ounces in 2016. So we are really focusing on that. Most of our operations here in South Africa, and we've got a small amount of gold coming out of Papua New Guinea, but we've got a big copper gold project in Papua New Guinea, which will be going into feasibility study now. So a fair amount of, I guess, irons in the fire, Tom.
You know, when we look at, of course, you know, what it ended up, you know, happening. Of course, we knew you had the unions, the miners. Can you talk a little bit about what the environment is in South Africa right now?
Tom, yes, it's been a fairly difficult time for the miners in general. There were some issues that started on the platinum mines and then spilled over to a lot of the mining industry. As a company, what we did, you know, we have a lot of people working for us. We have 40,000 people working for us. We upped a lot of our communication. We got to grips with what was happening in the industry. And relatively speaking, we didn't have any issues during the quarter that we're reporting on. Subsequent to that, we've had one of our mines that's been on strike. It's back in operation now. So we've been relatively sheltered from any of those issues, but I think that's thanks to our guys really getting close to our operations, getting close to our people, and managing all those issues. So we've been relatively sheltered from the issues that have been affecting the rest of the industry.
And as you said, you know, when you have 40,000 employees, you know, no matter what community you're working in, it's kind of neat, you know, when I'm looking at actually when I saw it happening, I said, well, this is going to get interesting because, you know, the Rand is getting weaker. And what that does, whether folks, like it or not like it, I'm not sure, in South Africa. But what it absolutely does, right, is puts more money to your bottom line. So then, as you spread that through the communities, that basically can satisfy a lot of different tastes, can it?
Yeah, it's certainly that, Tom. So, we have also a pay structure which is somewhat different to a lot of the other companies. Even at our lowest levels, we have things like profit share. So we've got a higher proportion of our salaries in variable costs, and therefore, getting improved safety, getting the production through is benefiting the employees better. They share in the profits. Obviously, if we're profitable, then we can manage to put more money into the community in our various community efforts. And we've certainly been spending a lot on rehabilitation during the last couple of years, because we have been closing those older operations that I was talking about. So, generally, I think, I guess the general impression that I have is that Harmony is a good place to work at the moment.
Yeah, big time. And, okay, so let's talk a little bit about how you got the net income up fivefold and, from quarter to quarter.
Yes, Tom. It's really a few things. One was really getting the production, and the production in tonnage as well as in grade. So that was the main area of focus. So more kilograms or more ounces coming out of the ground.
Okay.
So quarter on quarter, we went from production ounces of just under 300,000 to nearly 322,000 ounces. So that's 8% improvement. Then we were talking about the gold price. For us in rand terms, it went up 5% in rand terms. So that gave us a much better profit. Operating profit was about 1.4 million rand, or up sort of 9% on the previous quarter, and ultimately led to headline earnings per share going up by the amount that you're talking about. So a lot of things in our favor, but based really on good production figures and good control of costs and so on. So that was really the main effect. But also, I mean, the gold price, of course, is
Sure.
doing its bit, and these are fantastic gold prices. I mean, everyone looks at it when it goes down a few dollars, but in general trends, the gold price, I'm a very big bull on the gold price.
No doubt. And folks, when Graham talks about 322,000 ounces, remember, that's in 90 days. That's a quarter. What happens in the United States, Graham, is that, there's many gold companies that have 40, 50, or 100,000 a year. Do you know what I mean? So that's a quarter, yeah. Folks. Okay.
Yeah. No, it's a substantial amount of production. That's right, Tom.
Yes. Now, can you talk about, you have that monster in Papua New Guinea. Talk to us about that.
Yeah, it's a big guy. It's a copper gold porphyry. It's in a joint venture with a company called Newcrest, which is a Australian company. We're 50-50 joint venture operators. It's gone through a pre-feasibility study. So we've got a lot of figures in both our annual reports and quarterly reports. You can see those figures. It's one of those assets that's now, a 1 billion tons resource, and we've declared 450 million tons in reserve. It's also got a reasonable grade when it comes to gold grade. It's about 0.86 in reserve grade, and percentage copper, 1.2% copper. So a lot of gold and a lot of copper in this asset. Obviously a lot of work to be done to get it into production, but it's one of those mines that will probably have a mine life in excess of 30 years. So it's going to be a big guy when it produces.
Amazing. Now, can we talk a little bit about, you had a dynamite quarter here. Going the next few quarters, do you see yourself, Harmony, getting as much ore out of the ground in the next few quarters?
Tom, the strike that we've had, it's taken a while to get us back into production. So for that particular mine, we think that we may lose as much as 25,000 ounces for the quarter. I'm optimistic that during the next forthcoming quarters, both it and other operations will be able to make some of that loss up. So I'm certainly hopeful that we're going to get closer to the 1.3 million ounces that we were initially guiding towards at the beginning of the year. Our year ends in June, so end of June is our year end. And so I'm fairly optimistic. So this quarter that we're in, somewhat very similar to the quarter we've just had. And of course, if the gold price currently does what it's doing, it's going to be another great quarter.
Now, let's talk about the Rand a little. You know, the Rand, folks, when we take a look at the Rand, okay, the Rand in the last 10 years, you know, there were two separate spikes that got up around 10. You know what's interesting on this move here? It looks like the Rand wants to hang out at like 860 to 960. What's the feeling over there?
Yeah, it's quite difficult to predict, Tom, in what the Rand's going to do, but, you know, everyone's generally trending it that it's going to weaken.
Yes.
You know, when we did our sort of results and looked at the way forward, and that was in August, we were predicting a Rand of somewhere around 750, and now, as you rightly point out, it's closer to 860.
Okay.
So, you know, it's weakened quite a bit since then. Now, that means that in Rand terms, you know, the gold price has gone from probably somewhere around 370,000 Rand a kilogram. It's now closer to 470,000 Rand. So that obviously leads to a considerable margin. We've been able to, you know, pay for all our capital. We've been able to pay for all our exploration efforts, and we're doing a lot. We've paid these bonuses that we've been talking about to the staff.
Yes.
And we've done that out of cash flow. We've also managed to put cash in the bank, so we've moved from a net debt position into a net cash position. So we're pretty good financially, you know, well off, and that's, of course, the effects that the Rand has given to us. Last year, we upped our dividend. In fact, the dividend payments, I think, of something like $26 million actually came out of the last quarter's financials. So, you know, despite even paying that dividend, we still managed to put cash in the bank.
Amazing. Listen, folks, it's Harmony Gold. Come over to our website at tfnn.com. We happen to own Harmony right now, too, folks. And, you know, we got it right. We got right at the bottom, too. It's a beautiful thing. Listen, Graham, we really appreciate you out here giving us a great update. Great job. I mean, I'll tell you, you know, the perception in the United States is that everyone was having such a hard time over there. When you can come in with a 5-fold increase, absolutely unbelievable. You have a great one and a safe one, Graham.
Thank you very much, Tom. Thanks for having me.
Thanks so much. This is Graham Briggs, Steve Roach, Tom O'Brien. You stay right there, folks. We're going to be coming right back. We have the Dow down 235, NASDAQ off 26, S&P's off 50. Nasdaq off 55. We're going to be right back.